Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of LME 3-month copper and aluminium. I'll start with LME 3-month copper. A third bearish black crow on Friday, coming as it did after the recent immediate countering bearish dark cloud cover pattern and bearish opening black Mariposa. Plus, and I say this again very carefully, a bearish belt hold pattern. I'm prepared now to call the bearish belt hold pattern as the real thing, along with a recent pipe top. Why is these last 2 points all that important? It's very simple. As you know, I've been very cautious about the bearish belt hold pattern because it is one of the most powerful candlestick patterns known, and its recognition may and probably will likely have seismic implications. Overall, the recent action higher had been a trigger to a new, possibly large pattern. The market had previously punched up through the second of two overhead congestion bands. I'd mentioned them 2 weeks ago, and I quote, two overhead congestion bands, the first between 81.77 to 82.39, and the second between 83.50 to 84.24. In between them we have the late August high at 83.18, end of quote. Prices even went as high as just over the 50% Fibonacci line of the October 2020 to March 2022 move at 85.56 for a second consecutive session. However, the move was not sustained, and it is this lack of sustainability that had troubled me, especially as we started closing well below both congestion bands. This seemingly broke an earlier June to date pattern, a possible big W pattern. Now, the big W pattern is a derivation of the double bottom, but on a larger scale. I'd previously indicated a primary target X for this pattern in the 90.90 area and a secondary harder to reach target X1 in the 97.50 area. Last week we had a huge question mark over all of this idea. Thus, with two consecutive closes below the January 2021 high at 82.39, I've decided to retire this whole big W pattern idea after this commentary. Now, so far today, a slightly higher open before a fresh move lower down through the lesser Fibonacci line at 80.16 and the rising short moving average currently at 79.91. We must look down to the 78.72 to 78.79 area, and then at the lesser Fibonacci line at 77.75, and at the combination of the rising short medium moving average currently 77.34 and the flatlining medium moving average currently 77.39, which may or may not form a golden cross. LME 3-month aluminium. A reactionary bullish double pattern on Friday after the previous session's second bearish black crow and a suitable follow-on lower to the earlier bearish engulfing pattern, though as I said last week I suspected the move had aspirations to be a hammer pattern. This is a halt to the move lower from the tweezer top type action made over the previous weekend, not last weekend but the one before. Prices showed a marked reluctance to test down to the June 2018 high at 23.53 and the nearby flatlining medium moving average currently at 23.37. These two are seemingly creating their own small congestion band. Meanwhile, the top of the market was capped by the congestion at 24.41. This nevertheless still places a really big question mark over the recent idea of a late August, early November diamond bottom pattern, something I have been harping on about for a while now. I'd previously indicated potential upside targets for this diamond pattern. The issue of these potential targets is that the primary target X in the 25.60 area is on the edge of a series of 4 congestions that could effectively be seen as one, and the secondary harder to achieve target X1 in the 26.52 area is well within this bigger congestion. Thus we have congestions at 25.63 to 25.81, 26.08 to 26.22 and 26.50 to 26.75. Things continue to not look that good for the targets above for the diamond pattern. What happens at the medium moving average over the next few sessions I suspect will determine whether I keep or retire these upside diamond pattern targets. So far today, a lower open and a move down towards the June 2018 high and the medium moving average, but it seems very, very warily, carefully, much like Thursday last week. Thank you for listening. The short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.